Hey, what is up everybody? Sean here, and today we're talking about everybody's favorite topic, and that is taxes. So we're going to be talking about the most likely proposal that will be pushed by Biden once he enters into office, which is the Biden tax plan. But I want to start by saying that this video is not meant to be any political bias. I don't want this to be a political video. What I want it to be is a full breakdown, just kind of factual by the numbers analysis of what his tax plan is compared to the current tax plan that's going on, and how that basically will affect every single person one way or another. So that's what we're going to be talking about today. Before we get started, make sure you smash that like button, hit the subscribe button for me. I would much appreciate it. And let's hop into it. So we can't really talk about the new Biden tax plan without first talking about the tax plan that's in place right now, which is the Tax Cuts and Jobs Act that was put into place in 2017. Now, it's important to understand that we really didn't see any effect happen until 2018, and most of the full effects of the Tax Cuts and Jobs Act taking place in 2019. But essentially, it was a tax cuts across the board. We saw income ranges were lowered, the standard deduction was increased, the business expenses on some areas were up to 100% tax deductible. And the other thing that we saw was the corporate tax rate went from 35% down all the way to 21%. Now, the whole purpose of this was to really stimulate the economy, was trying to bring incentive of companies overseas to bring the jobs back, increase jobs, and overall just grow the economy and have a better economy than before. But like any tax plan, there are winners and there are losers. So there were some companies, there were some people who saw a massive benefit to their pockets in terms of taxes, some people not really seeing much change at all, and then some people seeing a worse situation than they had before. And that's the one thing that I want to start saying, is that with any tax plan, there's always going to be some people who benefit, and there's going to be some people who do not. So with that being said, let's talk about Biden's new tax plan and the proposal he will most likely be pushing. The first one that we hear the most about are for incomes over $400,000, and that is the new income tax increase, which is currently at 37%. He wants to push to 39.6. So that's a difference of 2.6%. Okay, so on the surface, not really a big deal. 2.6%. I'm pretty sure that the people making over $400,000 a year should be able to stomach a 2.6% increase. More than likely, it's not going to make too much of a difference in their overall well-being and their ability to still get ahead and still live a great life. Now, the second component to Biden's tax plan is the capital gains increase. For those of you who do not know what capital gains are, capital gains is essentially when you buy something at one price and you sell it for a higher price later on. So let's say I were to buy a house for $200,000. A year later or 2 years later, whatever time frame later, that $200,000 home is now worth, let's say, $250,000. Well, that $50,000 increase would be considered capital gains, and you would be paying taxes on it. So without going into too much detail, there are different tax structures on short-term gains versus long-term gains. But with Biden's tax plan, he's going to have the capital gains tax rate go to 39.6% for people who have incomes over $1 million. So what does that mean? Well, under the current capital gains tax plan, there are three tiers: 0%, 15%, and 20% for long-term investments. Right now, the way it stands, that if you make anything over $440,000 a year, you pay a top long-term tax gain rate of 20%. So like I said, with Biden's new plan, those who make at least $1 million or more a year will pay long-term capital gains of 39.6%. Remember, you have the 3.8% net investment tax as well, bringing it out to 43.4%. Now, this could be a pretty substantial jump. You're talking 20% up to 43.4. That's a 23.4% increase. So the third section of the Biden tax plan is the payroll tax increase on incomes over $400,000. Now, to give you a little bit of background on payroll taxes, every single person pays 15.3% taxes towards Social Security and Medicare, 12.4% of that going to Social Security and 2.9% going to Medicare. Now, if you're an employee, then your company covers half of that expense, and then you cover the other half. But if you're self-employed, you have to pay the entire 15.3%. Now, as it stands right now, any income as an employee earned over $142,800 is no longer taxed towards that 15.3%. However, on the new Biden tax plan, he wants to bring the 12.9% tax increase on incomes over $400,000. So that means that if you are more than likely a doctor or a lawyer or a high paid tech person or a corporate executive, someone who has a really high salary over $400,000, you will see an additional 12.9% increase in taxes once the 400,000 plus mark comes into effect. But if you make less than $400,000, more than likely you're not going to see any difference on your taxes there. Now, for those of you who are self-employed, it's really going to depend on how your payment structure is set up. So if you're a business owner who has an S corporation, which sometimes you see a lot of for people who start to make a decent amount of money, depending on how you take your payments, you may or may not have to pay that extra amount because there are tax loopholes and there's ways to work around it to where you no longer have to pay the Social Security tax based on your payment structure. So I'm not going to go into too much detail there, but there is a possibility, even as a business owner, self-employed person, that you may also be seeing that 12.9% payroll increase on incomes over $400,000. Okay, so the fourth component is the corporate tax increase from 21% up to 28%. So about a 7% increase. Now, keep in mind, though, that before the Tax Cuts and Jobs Act was in place, the corporate tax rate was as high as 35%. So while it is an increase, overall, it still is lower than what it used to be even before this current tax plan. Now, the way the corporate tax system works right now, which is a very heated and debated topic, is that a lot of companies, despite how much money they make, can take those profits, dump it into things like research and development or advertising or different things and start having enough write-offs to where even though they had a profit, they still show a loss on paper. And then they can take that loss and on future earnings, use that loss to offset some of the taxes. So to combat that, Biden has offered and proposing a new plan, which is a 15% minimum tax, stating that no matter how much profit they make, no matter how much they offset their taxes and, write-offs and all that stuff, there still will be a minimum 15% tax that they are required to pay. So the main question becomes, how is this going to take an effect? Because economists are all over the fence here on how this is going to work. On one hand, the idea of lowering the corporate tax rate was to incentivize companies to come overseas, come back to the United States, create more jobs, create more opportunities for American workers, and to hopefully stimulate the economy. Now, the question is on whether or not that actually was effective. Now, while some jobs were created, on some hands too, some companies just use that extra tax savings to just do corporate stock buybacks. So instead of investing in their own company, they just bought back stocks and just padded their pockets even more. So even though economists are all over the fence, it's hard to say exactly how this is going to work one way or another. Some people are worried that if we increase the corporate tax rates, that stock markets could eventually plunge. There's just no way of knowing at this point. Economists are all over the board, so I can't really give too much notion on that, but that is how it stands as of right now. The fifth one is the $15,000 home credit for first-time home buyers. Now, the idea behind this is to give a tax credit for first-time home buyers upwards of $15,000. So let's say that you owe $20,000 in your taxes. Well, if you were a first-time home buyer, you'd get a $15,000 credit that would be deducted from that $20,000, leaving you with a much smaller tax bill. For those of you who owe less than $15,000 in taxes, that credit will be applied and you will be given the difference of whatever is remaining. So the idea is to really kind of push the home market, to push first-time home buyers out there. But the question becomes, does this actually create the incentive? Because perhaps if you incentivize them too much, more people may be buying homes, driving up home prices, which, who knows, may negate the overall effect anyways. The sixth one is the $3,000 tax credit for children under 17 and an additional $600 bonus for children under the age of 6. Okay, so those are some of the proponents in the new Biden tax plan. There's a lot of other things that we don't really know for sure. They're kind of like speculation, word on the street, but one of the big ones, especially for finance, real estate people, is the getting rid of the 1031 exchange. And so the idea is that Biden wants to get rid of the idea of the 1031 exchange where you can buy a house and instead of selling it and paying the taxes on it, you can take those proceeds, move it on to the next one, tax deferred. Who knows if this is actually going to happen or not? However, I don't know if that's going to be that effective or not. There are some pretty intense lobbying in the housing market. And so I really don't think that it's going to be very easy for Biden to kind of push getting rid of 1031 exchanges. Okay, so the question of the day is, how is everyone else affected? Because everyone will be affected one way or another. Right now, you've been hearing a lot of stuff about, making over $400,000 a year, $1 million a year. And for most of you, you're probably watching this, you're like, yeah, that's definitely not going to bother me any bit. That has nothing to do with me. I make a very small fraction of that. But even though most of these policies are for large businesses, for high income earning individuals over $400,000 a year or even $1 million a year, everyone will be affected one way or another. Going back to the Tax Cuts and Jobs Act, where a lot of the tax burden was decreased, those were only temporary. And so in the year 2025, most of those tax cuts will be let go, meaning that unless if Biden also puts in a plan or a section of his plan that continues those on or makes a change to those, people will see a higher tax increase by the year 2025 in various stages. Now, more than likely, I'm sure something may happen along the way, depending on how the economy goes, depending on how this pandemic evolves. But as of right now, everyone will be affected in that way. The other way in which people will be affected is, once again, these payroll tax increases. When companies are forced to pay more taxes, the question becomes who ends up footing the bill. And this is something that economists kind of go back and forth on. And so the idea is, on one side, is that if a company now has to pay an extra 12%, more than likely they're not going to want to pay all that themselves. So they're going to take those extra taxes they have to pay and push some of that onto the consumer with higher priced goods. So even though you're not going to be taxed more, there is a possibility that a lot of things that you purchase may become more expensive over time, thus having an effect on you. However, on the other side, there are economists who also believe that it really doesn't have that much of an effect and that companies probably won't be able to increase prices by all of that much. But one way or another, every single person will be affected. For most people, your taxes will increase at some point unless Biden specifically puts something in the tax plan that pushes those tax breaks even further out or does some sort of modification to them at this point. So that is it on the Biden tax plan, how it compares to the current one right now. Leave some comments below what your thoughts are. Do you think this is going to be beneficial for traditional middle class or lower income individuals? What are your thoughts on it? I want to hear it below. So make sure you comment below with your thoughts. Also, if you haven't yet, make sure you smash that like button for me. It'd mean the world to me. Hit the subscribe button channel. And I wish you the best out there. Stay tuned for more finance videos. And let's get out there. Let's build that dream and let's crush it.